Drew Edwards with International Tax Advisors, Inc., back for another episode of Tax Briefs. Previously, we've discussed two levels of taxation, one at the entity or corporate level and another at the U.S. individual level. And we talked about how the choice of entity, a non-corporate entity, like a single-member LLC, could give rise to only one level of taxation. And so the entity choice is particularly important when trying to mitigate two levels of taxation. Now let's talk about how entity choice can be important outside of mitigating two levels of taxation. So here we have a single member LLC, which is not subject to entity level tax, and an S Corp, which is also not subject to entity level tax. And so why might someone choose between these two options if they both only give rise to one level of tax? And that is something other than income taxes, and that's payroll taxes. Generally, the history of an LLC is all of the members are active, participating members. So all of the 100 that flows up to the individual should be subject to payroll tax. And when you are the employee and the employer, you pay both sides. So this results in 15.3 of payroll, both 7.65 for the employee and 7.65 for the employer. So each dollar of income is subject to 15.3. However, because the S Corp, although it's not subject to one level of taxation, is not necessarily disregarded the same way that the LLC is. It's still a regarded S corporation that is just not subject to a level of tax. That background affords it a better answer for payroll potentially, and that not every $100 that's distributed up should be considered subject to payroll taxes, and likewise should not be considered salary. So in the S Corp setting, we have the ability to look at some case law that essentially says how much of your earnings should be considered reasonable compensation. And so we can look at some of the case law and see what may apply to your facts, what type of service business you're in, or what typical salary someone in your industry makes. And therefore, not all 100 of the revenue is also considered salary, maybe $30. So only 30 is subject to 15.6%. So we've effectively lowered our payroll tax liability by 70% by choosing a different entity. So obviously some things to consider, because the S Corp is not the right entity for everyone. There are some limitations on that, but certainly something to consider. Important to note that for the S Corporation election, we use Form 2553 rather than Form 8832.